I've never seen a piece of technology or innovation touch as many sectors of the market as artificial intelligence. And in this video, I'm going to talk about quite possibly one of the most underrated areas that artificial intelligence has massive tailwinds for. And the fact that it is underrated means that valuations are still relatively attractive in this area. You're not paying the nosebleed level of valuations that you are when we look to pure play AI stocks that are 100% going all in on artificial intelligence, or even to a degree the semiconductor or the chip companies, the hyperscalers, things like that. Valuations remain attractive in this sector, and that is the utility sector. And before you click away from this video because you think I'm going to be talking about slow growing, boring utility companies, the data I'm going to show you in this video will highlight the gigantic amount of tailwinds the utility sector has in terms of artificial intelligence, and how this is a potential sector that could turn from a slower growing, boring play to a fast play. And there is a lot of government intervention in this regard that could fast track the process. So you're going to want to watch this video to the end because I have some amazing data points that will kind of highlight this to you. I'm going to be going over two particular segments of the utility sector, two companies or two areas of that market which operate very differently. So you're going to want to watch both segments start to finish. And as always, everybody, I got the report down in the description, my top holdings. You can see what I own, how well they've done for me, my allocations, my thesis, things like that. It is absolutely free, just takes a few seconds to sign up. But let's dig into why utilities when it comes to artificial intelligence. Utility companies are typically companies that grow earnings in the low single digits. They provide, reasonable dividends, dividend growth, things like that. But when we look to a company like, let's just say Capital Power, it's more than doubled over the last while here. And when we think of AI and AI stocks in general, we're primarily focused on those hyperscalers, those pure play AI companies who are, dumping every penny they own into expanding AI infrastructure. But when we get to the point where that segment of the market becomes so popular, valuations start to get stretched. And what happens here is you have next to no margin of safety when it comes to these companies. Yes, you could buy them and the story could very well play out to be true. However, you could also buy them. Growth could be slower. Profitability might not be as expected. And in this turn, you have paid so much for that today that the valuations are no doubt going to fall. So I do believe there is very little room for margin of safety when we think of a lot of pure play AI companies. I still do believe in the hyperscalers to a certain degree, but when we get to the returns that these companies have provided, it leads to an element of FOMO. This is a very popular saying on the market these days, the fear of missing out. So when we see all these massive returns and we don't have a piece of that pie, we tend to disregard valuations completely. We end up buying them just, for the sake of not missing out on owning them. And if valuations do end up correcting or growth ends up slowing, we end up with monumental losses. This happened a lot back in 2021, obviously not with AI related plays, but with a lot of speculative growth stocks that just went through the roof pricing wise. A lot of people just bought them disregarding any sort of valuation, and they ended up paying the price. Now, I'm not saying this is guaranteed with artificial intelligence stocks, depending on which ones you own, but it is a risk. In my opinion, they are priced to perfection. And when we overpay for companies, we might not realize this immediately because the markets can stay irrational for a very long time. But over the long term, the higher price we pay today, the lower our future expected returns can be. But I've spoken enough about that. Let's get back to utilities and why they are so interesting in an environment like this. So utilities are kind of what I would call the picks and shovels of artificial intelligence. And if you don't get this reference, it's kind of a reference to gold booms. And they would always say the only people who ever really make money in gold booms are the people who sell the picks and shovels. Gold miners boom and bust cycles all the time. But the fact of the matter is they needed ways to get it out of the ground. And the companies who sold the products to get it out of the ground ultimately got their money regardless of how the environment was. Utilities, and I would say to a degree semiconductor companies, are definitely the front of line when it comes to artificial intelligence. No matter how profitable a particular piece of software or technology a company is developing in regards to artificial intelligence, no matter how profitable it is on their end, they need power to operate it. And those utility companies will get paid to supply that power, regardless of how profitable an endeavor is for an artificial intelligence company. Now, as I had mentioned, power producers, they're kind of slower growing, high yielding. They're a bit of a bond proxy in a way for the most part. However, they're sort of at an inflection point right now where they need to be able to expand capacity at a much faster rate than they are. And when I get to the next portion of the video, I'm going to introduce a lot of things that the government is putting into place to fast track development, which could ultimately be an added tailwind that could amplify the growth of these utility players. So a bit of data for you. Data center power demand is expected to more than double by 2030. Yes, you heard that right. Over the next 4 years, they expect data center power demand to double. And that is actually a conservative case. When we look to 2024, data centers made up around 4.4% of U.S. power consumption. On the high end of things, they say that could potentially increase to 20% by 2030. So you're talking about nearly a tripling in the current rate of U.S. data power consumption over the next 4 or 5 years. And actually, the more interesting situation here is they believe that data centers alone will contribute to 50% of overall U.S. electricity demand over the next 5 or 10 years. So why is this? Why the increase in demand? Well, obviously, we need these data centers to build out these LLMs, these modules, any sort of artificial intelligence technology. And the only thing is, 3-4 years ago, if you wanted to know something, you would go to Google, perform a traditional Google search. Now, a lot of people are heading to artificial intelligence, and Google is actually integrating something like Gemini into their traditional search queries, which kind of runs one of these LLM processes as well. And the thing here is a request through something like ChatGPT consumes 10 times the power as a traditional Google search. It's absolutely absurd. So that means the more people that are utilizing these LLMs, whether it be through Google's AI functionality or something like ChatGPT, Gemini, things like that, the more power consumption is used. And I've actually read some forecasts that data centers alone by 2030 will consume 10 times the power as the entire New York City, which is crazy to think. So this increase in power demand has actually created a pretty interesting situation. Many companies are expected to go carbon neutral over the next decade or two. However, there's an issue that renewable projects are not rolling out fast enough to satisfy the data center demand. So because of this, we have a lot of utility providers and a lot of governments who are trying to build out natural gas plants at a rapid pace. So we're going to be driving a lot of usage from natural gas. So with the green movement being in the eyes of a lot of these major companies, the fact that these utility providers are having to ramp up natural gas power and continue to aggressively build natural gas plants just kind of shows you how high the demand is and how renewable energy is just not going to keep up with this level of demand we are witnessing. So when we looked at the companies that are expected to benefit from the rollout, the first one I can think of is Capital Power. So Alberta is one of the best spots in the country in terms of data center buildouts, and this is for a multitude of reasons. For one, we have a ton of natural gas. We have a ton of reserves, so this is very attractive from a power generation standpoint because of the abundance of supply. Secondly, Alberta is very, very cold, which ultimately does reduce the need for cooling demand among a lot of these data centers. We are freezing here in Alberta for the vast majority of the year, which is ultimately a benefit. The third would be population density, especially when you get into the northern parts of Alberta. There's not a lot of population, so there's a lot of land and potential infrastructure build out to put in these data centers. And finally, Alberta is probably one of the most beneficial provinces in Canada in terms of taxation, in terms of the abilities for corporations to operate here and drive stronger profits. So it is very attractive, and Capital Power, the largest footprint Capital Power has, is in Alberta. They are expected to benefit substantially from data center buildouts in Alberta, and the Alberta government is putting a lot of things in place in order to effectively become the hub of Canada in terms of data centers. They want to attract over 100 billion Canadian dollars in investments in terms of data center buildouts over the next while here. So Capital Power is a company that looks to be able to benefit from this. Now, another interesting option would be Brookfield Renewables. Now, I did mention that renewables are having a very hard time keeping up with demand, but if there is one company that can at least do this to a reasonable level, it would be Brookfield Renewables. There's not a lot of renewable players on the planet that have the access to funding that Brookfield Renewables does, the scale to build out these projects, and the ability to satisfy demand from these hyperscalers. And that's why you've seen companies like Microsoft Inc. deals with Brookfield Renewables, companies like Alphabet Inc. deals with them. They are a massive player in this space, and they should be able to benefit from long-term tailwinds. Now, Brookfield wouldn't necessarily benefit from the aggressive natural gas expansion in terms of power, but a lot of these companies do not want their AI platforms to kind of be associated with having a negative environmental output. So if they can get access to green energy, they will do so, and we've seen this from many of the major companies. So everybody, just a quick break from the video. Head down below, like the video, subscribe to the channel, and drop a comment if you like videos like this, and I will no doubt produce more of them. Obviously, the likes and subscribes help the channel, help the algorithm, help me produce more videos. So I really appreciate the support, but let's get back to the video. So the second element of this is grid expansion. And I mean, the reality of today's situation with the insane demand that AI is expected to have in terms of power is we do not have an electrical grid that can satisfy this power demand. Now, to pile this on even further, we have EV vehicles that are expected to drive even further demand as more and more people go to electric. So they've had a lot of legacy power plants, even potentially coal power plants in the United States that were set to be shut down. And they said, whoa, we cannot shut these down. We need this power demand. We'll kind of figure it out down the line, I guess you could say. So there is an infrastructure problem in North America and arguably globally because of the rapid surge of AI demand. And there are particular companies that are involved in this, and I'll get to them at the end of this segment, but I do want to discuss what is happening in this space right now. So regulatory approvals for utility projects have been painfully slow. This is why you see a lot of these utilities are not growing that fast. It takes years and years to get regulatory approval to put this infrastructure in place. It's very expensive, but regulatory bodies and governments are putting in fast-tracking processes to get the ball rolling faster, and they're also providing very attractive financing to encourage a lot of these companies to start building out the grid faster, making it more efficient, because the last thing you want to happen is AI-related technology gets slowed down because there is not enough power to drive demand, to drive advancements in the technology. Now, in addition to this, you have governments who have a vested interest in becoming the number one AI player on Earth. We can think of this as a bit of a mini space race, I guess you could say. Now, you could argue that the space race back in the day was more on the defensive side of things, whereas this is more on the commercial build-out side of things. But there is a lot of government interest in artificial intelligence in terms of cybersecurity, in terms of technological advancements. So when the government wants to be the number one player in a particular space, they will aggressively try to do that. And so you could see a lot of quicker approvals from a regulatory standpoint and a lot of money by government bodies being dumped into expanding this infrastructure. Whoever builds out transmission lines and expands their grid faster will be able to relay more power into the tech, get the technological advancements in their country ahead of others, and ultimately be the leader in the space. So again, you have the US government fast-tracking permits, providing a lot of grants, etc., to build out the grid, and you turn a industry that is typically pretty slow growing into one that has a lot of tailwinds. The faster these companies can get shovels in the ground, the more quickly they can realize revenue and profits from the projects. Now, on the US side of things, obviously, we have them firing on legacy projects, running coal, things like that. Canada is a bit different. They want to double their capacity over the next, I believe it's decade or so here, but they also want to do so on a carbon neutral basis. Now, these are relatively lofty goals and ones that could probably put it behind in terms of the overall AI race, in terms of this power demand. But if it does work out for them, if they can actually achieve this, Canada is seen as one of the greener forms of energy producers in the world. And as I had mentioned, a lot of these companies are going to be wanting to go carbon neutral. They do not want their AI infrastructure to be seen as some environmental drag. There's a lot of insistence on these companies going green. It does not look good when they're consuming a bunch of power and polluting the environment. So if Canada can actually pull this off, if it can actually double the capacity of its grid and do so primarily on a renewable basis, it will attract a ton of investment in this space into Canada. Global leaders will see Canada as a place to build out their AI infrastructure. There is zero doubt about this. But as of right now, companies are way, way behind in terms of distribution. The US is simply not building enough transmission lines to get more power on board, and I do believe there will be changes in this regard to get things built faster. I mean, a prime example of this, there is 1,200 gigawatts of renewable energy that is just sitting there waiting to get connected to the grid. However, they cannot connect to them because they don't have the transmission lines, and the regulatory process is slowing it down and making it very difficult. Now, you also have the fact that existing transmission lines can be upgraded with, let's say, more efficient electrical lines running through them, which has the potential to significantly increase power demand without actually having to go and put new transmission lines into the ground. Now, the one company I do expect to benefit significantly from this, and is one that has been on my watch list for a very long time, is Quanta. They trade under the ticker PWR. So this is a company that, in the simplest way possible, they build the substations, they build the transmission lines, they improve the electricity capacity through infrastructure. So my main concern with this company right now is valuation. I haven't pulled the trigger on it just because I do believe it is expensive. This is one of the companies that is kind of well known, well out there, that the fact that they're going to benefit substantially from this. So I would like to see valuations come down, but on the flip side, I'm not really all that surprised that they're this high because of the current situation we're in terms of power demand. Now, on the Canadian side of things, I don't really know of a publicly traded company that will solely benefit from kind of being the operator in terms of grid expansion. However, you do have a lot of utilities that not only provide power, but also own the grids in, let's just say, Hydro One, Emera, Capital Power, like I had mentioned before. So they will definitely benefit from a more modern grid, all while supplying the power, but they aren't a pure play company on the expansion of that grid themselves. So, wrapping it all up, we have everybody just sitting here talking about artificial intelligence when it comes to semiconductors. We have companies like Oracle increasing their backlog by 300% semiconductor companies, chip companies, pure play AI companies. But I think an industry that is often forgotten about and has a lot of tailwinds is utilities. And you can get these companies for cheaper prices. Will they go up 500, 600% over, the course of a year or two, like those pure play AI companies are, they've been doing over the last while? No, not necessarily. However, I do believe they have a larger margin of safety, and they actually have the potential to provide outsized growth in the future. And a lot of the market is not flooding into these companies because they're just really not talked about all that much, and they're not the flashy growth story that a lot of these other AI stocks are. But that doesn't necessarily mean that they can't be rock solid investments moving forward because of these tailwinds. They are typically very boring investments, and prior to this AI revolution, I would tend to agree, but now we have a little bit of growth behind them, and it's going to be very interesting to see how this plays out. If you're really looking for a picks and shovels play in artificial intelligence, one where valuations are not at nosebleed levels, have a look at some of these utility providers, look at the story, look at the potential growth moving forward in terms of electricity demand, and you actually might find these to be quite attractive. So everybody, that's it for the video. Head down below, like the video, subscribe to the channel. If you want more content like this, I cannot stress enough, you got to drop a comment down below and I will produce more content like this. And as always, everybody, stay tuned for more great investing content.